Here's a surprising twist in the financial world. While gold miners are taking a beating, the FTSE 100 is standing strong, unfazed by the turmoil. But here's where it gets controversial. Is this resilience a sign of market confidence or a temporary illusion? Let's dive in. Despite a sharp drop in gold prices, which sent shares of major miners like Fresnillo and Endeavour Mining tumbling, the FTSE 100 managed to close 0.3% higher at 9,426.99, gaining 23.42 points. This stability comes as gold prices reversed course, falling 4.9% to $4,131.30 per ounce on Tuesday, with silver plunging even further at 6.8%. Why the sudden drop in precious metals? And what does it mean for investors? Kathleen Brooks, research director at XTB, suggests the sell-off isn't tied to a single event but rather a mix of factors, including stretched valuations and anticipation of softer US CPI data later this week. Yet, she notes that the gold price hasn't fallen below Monday's low, calling this a healthy price action that keeps investor exuberance in check. But is this really a healthy correction, or a warning sign of deeper market shifts? We'd love to hear your thoughts in the comments. The impact of the gold price plunge was evident in the FTSE 100, where Endeavour Mining dropped 9.7% and Fresnillo slid 12%. Hochschild Mining, listed on the FTSE 250, shed 14%. Are these losses a buying opportunity or a red flag for the mining sector? Adding to the complexity, Joseph Darrier of Tickmill points out that progress in resolving the US government shutdown could ease investor anxiety, potentially reducing demand for safe haven assets like gold. Meanwhile, UK public sector borrowing rose to £20.2 billion in September, the highest in 5 years, slightly above forecasts. How will this affect the upcoming budget? And what does it mean for taxpayers? Elliot Jordan-Doak of Pantheon Macroeconomics predicts borrowing will hit £126.9 billion by fiscal 2025-26, well above the OBR's forecast. He expects the Chancellor to address a £15 billion shortfall by raising taxes and cutting spending. Is this the right approach, or could it stifle economic growth? Share your opinion below. In other news, General Motors shares surged 15% after raising its full-year guidance, while Warner Bros. Discovery jumped 11% on rumors of a potential sale. On the FTSE 100, Segro rose 2.9% on strong rental growth, while Coca-Cola HBC dipped 0.9% after acquiring a 75% stake in Coca-Cola Beverages Africa for $2.6 billion. Is Coca-Cola HBC's African expansion a bold move or a risky gamble? As we look ahead, Wednesday brings UK inflation data and Japanese trade figures, along with earnings from Barclays, Fresnillo, and Reckitt Benckiser. What trends are you watching? And how are you positioning your portfolio in this volatile environment? Let's keep the conversation going. Your insights could be the next big takeaway.